All right, so this is going to be a trade review of the trade that I took today, um, May 22nd, which is a Thursday. You can see we're here before market open, but I'm going to fast forward to kind of the first situation that we run into here on the day. So right here. So this is kind of where it starts off being a little of a strange day. We come up and we sweep this 5 minute high. Now this high was from a couple days ago, but you can see we're reacting off of it pretty well. And as you know, I'm waiting for another sweep to happen. So I marked out my level, and I'm just gonna sit here and wait for price to come back up to this high like it normally does. And that's just not the case for today. So we're starting to push down here a little bit. I'm kind of looking at this gap here. Now, I didn't really want to break my rule so much because if we do kind of remove the fractals, now what determines a fractal, which are these arrows right here on the chart, um, what needs to happen for one of these arrows to show up is two candles to the left cannot be lower than this candle, and the two candles to the right cannot be lower than this candle here. So with that being said, in a situation like this, I'm not really sure if it shows up too good on the recording or anything like that, but this does not get marked with an arrow because the candles in front to the right, so like in the future, um, the first candle after this high is lower, but the second candle is not lower and pierces that high. Now, if you are familiar with normal ICT ideas of swing highs and swing lows as liquidity, it's just the candle on the left has to be higher and the candle on the right has to be higher, and then vice versa. If it's a short, the candle on the left has to be lower, the high has to be lower, and the candle on the right has to be the high has to be lower. I know that sounds confusing, but like if we just look at this, like the opening 9:30 candle, you can see despite the fractal, this candle's high is lower and this candle's high is lower, so this is a swing point in the market. Same thing here. This candle's low is higher than this low, and this candle's low is higher than this low. So for a fractal, it has to be two candles have to be lower on the left, and two candles on the right have to be lower. So, and I only look for fractal sweeps as either for the 5 minute and the 15 second. So in this situation here, um, I wasn't really looking at this sweep, but I did see it. So you'll see me kind of look at this gap here because I'm like, should I take this gap or should I just stick to my rules? Now, I did stick to my rules and I did not take that gap, but taking this gap here would have paid off and I would have gotten in at the high of the day as we're speaking. The market might come back up to this level, but I don't really think so. So you can see we do trade into this gap here. We do fill it in all the way. We do fill up all the way up to this volume imbalance, and that's all she wrote. She never came back up to sweep another level. You can see as I fast forward, we're still pushing. Mind you, this is kind of where I was looking to short initially. At this point, we're about 100 points lower. So something that was really confusing to me was I wasn't really sure what I should be looking at. Like, should I still be shorting? Should I just step away? Should I wait for another sweep? I have yet to run into the situation while trading, you know, the market maker sell, the market maker buy on the 5 minute chart and the 15-second chart, and only specifically the liquidity swing highs and swing lows. You can see I don't have any fair value gaps marked on my chart. I don't have any breakers, any order blocks, none of that. I'm just looking at the highs because, especially since I'm on such a low time frame, like a 5 minute chart as my higher time frame, I'm gonna be having to mark out a lot of fair value gaps. Like, I mean, just look at this move here alone. There's a gap here, a gap here, a gap here, a gap here, a gap here. Like there's so many gaps that get created on lower time frames that it is impossible to understand which one I should be trading from, because I would just be looking for a 15-second internal sweep on every single gap, on every single high, on every single order block. It's just too much to look at. So at this point, there is really no other level that I could trade from. We would have to come all the way back down to low a day for me to see if I could long, which that's probably not going to happen, right? And then I would have to wait for it to come all the way back up to the high for a 5 minute sweep to happen, which probably isn't going to happen, at least anytime soon. I know I'm recording this at 11 a.m. right now. You can see down there. I took this trade. I was looking at this about 10:22 a.m. Anyways, let's keep the video going. You can see I'm just kind of marking out these 15-second highs. You can see none of them have been taken the whole way down. None of these highs. We have had no kind of smaller time frame, micro time frame, buy side liquidity sweep. So we start to fast forward. Still no kind of sweeps. And then we're going to move into the first trade that I took. Now, I took two losses before I took my winner, which was pretty disappointing at first. So this was the first initial trade that I took. I said, still following the bearish narrative because we swept this high up here. Um, I'm still following short. So if you look, we had our 15-second sweep. We did sweep here, but we formed no gap. We did form a gap once we took this high up here. So then this is the first fair value gap after taking that high. So you look, I'm risking about 10 points here. It's about $90, I think. We do get filled eventually. And you can see, same kind of thing. The previous candle's low is my target. And you can see we do instantly get stopped out here. At first I thought maybe, okay, maybe, we do always, inverse, but, we didn't survive that one. And then unfortunately, again, I do take another short. Now, in this situation, I wasn't really sure what I should do. Like, should I step away? Should I just trade every gap that comes off of one of these 15-second sweeps until one of them works? And that's honestly what I ended up doing. The next sweep that we created with a gap, I took a short. I set my limit there, 45.50. This one seemed a little bit more promising off the start. It wasn't really an instant stop out here. So I'm like, okay, like this might be, the one here. We had a triple sweep. We had a sweep here. We had a sweep here, and we had a sweep here. So we put up three highs, right? And have failed. And so now I'm like, okay, this should be the trade. This should be the winner. I'm gonna make about, I think it was $360 minus the $900 loss. I'd be up about like 280 or 250 or 270 or something like that. Fast forward, it's looking good. Nice down close candles, but I'm just gonna save the time. As you can see, so yeah, we took this low, failed, and then it completely rounded back up and stopped me out. So at this point, I'm like, okay, like I'm down. I've taken two losses back to back, but at the same time, it's like we have all these levels to trade off of, and so I don't know if this was a good idea. I don't know if I should have maybe stepped away, but again, we swept the 15-second high and we formed a 15-second bearish fair value gap. Now, just to cut the suspense, this was the winning trade for the day. I'm going to talk about what I did with my stop loss here. So as you know, if you watched, I think maybe the 2024 mentorship that ICT did, he talked about to have kind of like the best risk reward when trading fair value gaps, whether that be off of a higher time frame or off of a lower time frame. He discusses putting your stop at the high or the low of the second candle of the fair value gap pattern. Now, fair value gap pattern requires three candles: the first candle, the second candle, and the ending candle. That second candle is the one that creates kind of the gap, and the first one and third one, you just have to make sure the wicks aren't touching each other, and that's a gap. So I didn't like having my stop um, at this second fair value gaps high, just because we had this large wick, and I had a feeling that price was going to trade up into the wick to kind of test that the sellers that showed up after taking that high. So you'll see I'll have my stop initially up at 69.25 just to give myself some breathing room in case it does want to test the wick. And you can see it did end up saving me. You can see I'm kind of looking at it right now where I'm like, okay, like if I would have put in my stop there, I would have been stopped out like right now. And what I did end up doing was once we kind of started to close back below my entry, once you started to close back below my entry here, you'll see I will move my stop to like where I would normally put it, um, just to kind of like decrease my risk. So you can see, I think this is right here when we start to kind of get our push lower. So yeah, we get our push lower. I'm like, all right. So I move my stop down. I'm only risking about $70 now in this trade, and my TP. Now, let me pause here. So I normally I should have my TP here because my entry was on this new 5 minute candle. So this should be my target, but I didn't make it my target. Just for the simple fact that I was pretty bearish overall. Like, I mean, if you just look at this, like, we took this high, we completely failed, and we're just rolling over. We completely inversed this gap here. And then also now looking at it, this inversion here was where I took my short from. You can see this wick on this 5 minute candle. You can see the inversion here, right? A bearish fair value gap that got closed through. We then proceed to retest it on this wick. This wick corresponds with this wick here on the 15-second chart. So, like I said, I was still overall pretty bearish. We have yet to take sell side liquidity in the market. Yes, we have the fair value gaps, which do count as liquidity, but I don't really consider it as liquidity. I really consider the lows as liquidity. I just consider kind of the fair value gaps more as targets rather than places to take trades from. So I did end up having my target down here at this low, which was inside of a fair value gap. Um, this was about a 40-point target. Looks like 39.75. And it was a quick, easy trade. You know, it went straight down the TP. Once we kind of, consolidated on the gap, we got a quick push down lower. So you can see I'm just patiently watching this, I'm just like, and this happened today, so I still kind of have the feelings of how I was feeling. Let me put this to normal time while I talk. Um, Let me just pause it, or I'll just keep it playing. No, I'll pause it. So either way, that was a trade. You can see I hovered over it. It was a 5.19 risk reward trade. When I had initially placed it, it was only a 2R because I was covering the wick. But once we started to break down, I was comfortable moving my stop down to where it should be normally, because obviously if we come back up to those highs, what are the chances that price is not going to take my stop or take this wick that was resting up at the highs? But like, I mean, mentally for this day, it was pretty weird. Um, because this was a level that I was looking to short from. I never got my short confirmation. It ran, it pretty much ran away from me. You know, I was just sitting here. I missed. I don't want to say missed, but I missed the move in a sense because I wasn't part of it, so I missed it. But it wasn't that I missed a trade setup. There was just no trade setup for me. There was just no edge for me that I trade to get in up here. If I was to get in up here, yes, I would have gotten a phenomenal entry, but at the same time, I also would have been breaking my rules. So I would have made money, but it would have been bad money because I didn't follow my system. Now, looking at this trade, sure, I caught it a little bit late. I did catch it off of a pullback. If you look at the 5 minute chart, we have two up close candles. I get short here within the wick. But even though I didn't make as much money as if I was too short from the high of day, this is something that I can repeat day after day, which is what I have been doing, and it's good money to make because it was calculated, it was planned. I have a planned target, I have a planned stopped, and it paid off. I took two losses beforehand. Losses happen, but this is what is so important about having a good risk to reward ratio because I can take two losses and I can cover those losses and make some profit with one trade. And that's how you want it to be. That's how you want to trade. You want to trade in a way that you are not having to be right on every single trade. Just to sum this day up because this video is getting pretty long now. I'm just talking quite a bit. This is just for me personally. If like just for me personally to like review and watch over and just think how I'm feeling. But for the situation that I was dealt with today, not being a part of this move up and not really being a part of this move down at all because I had no entry. I had no entry going up. I had no setup going short. I stayed calm. I stayed patient. I stayed collected. I didn't FOMO into a short. I didn't FOMO into a long. I didn't be like, okay, the shorts aren't working when I took those two losses and I started flipping long. I just stuck to what I see, to what I know, and how I know how to trade and how to target. And it paid off. And I'm just leave it at that. It was a good day. Ended the day green about 203 after taking those two losses. And so far on the Eval account, I'm up $1,400 with a 50% win rate and a average of 2.5 risk to reward and a profit factor of I think 2.5.